Have you ever wondered how millionaires manage to profit so much from Bitcoin, while most people only get in when it's already too late? The truth is, they never wait for the next surge. They position themselves beforehand. And the most curious part? Many of the strategies they use today can be applied by anyone, including you, even if you only have $100 to start. If you're between 20 and 35 years old, want financial freedom, and feel like time is slipping away too fast, this video might be the shortcut you've been looking for. Today, I'm going to show you what the wealthy are doing right now, silently behind the scenes, to prepare for a possible Bitcoin explosion in 2025, and more importantly, what you can copy this very month. And no, this isn't about luck or wild bets. These are practical, repeatable strategies that you can start applying with little money and long-term vision. So stick around until the end, because missing this chance might cost you more than you imagine. Go ahead and hit that like button to support the content and subscribe to the channel, because what you're about to hear isn't what most people are telling you. You're going to understand why bull cycles always favor the same groups, and how to stop watching from the sidelines while others get rich. Bitcoin is about to enter another explosive moment. Those who follow the cycles already know, halving always comes before major price surges. Every 4 years, the reward for mining new Bitcoins gets cut in half. That reduces supply, while demand, especially institutional demand, keeps rising. The most recent halving happened in 2024. Historically, about 12 to 18 months after that event, Bitcoin reaches new all-time highs. We are entering that window. And unlike 2017 or 2021, now we have a global environment in crisis, persistent inflation, and weakening fiat currencies. It's in this context that big investors look for protection in scarce assets, like gold and especially Bitcoin. This isn't speculation. BlackRock, Fidelity, and other giants are already positioned. The stage is set. And those who understand this now can change their financial future. Make sure to subscribe to the channel if you haven't already, because what's coming next is real content, straight from the trenches of financial strategy. But what stops most people from taking advantage of this opportunity? 3 mistakes that repeat in every bull cycle. First, waiting too long to enter. The average investor always wants the perfect moment, and by the time they realize, the price is already taken off. Result? They buy at the top and sell in panic. The second mistake, believing you can only make money with Bitcoin if you're already rich. That's a dangerous illusion. The truth is, those who profit the most are the consistent ones, not the ones throwing in huge sums all at once. And the third mistake is emotional. People buy when they're euphoric and sell when they're scared. The crowd acts on headlines, while millionaires follow a plan. Now tell me, how many times have you fallen into one of these traps? If that's happened to you, leave a comment below saying been there, so we know you're part of the team that's ready to evolve. And hit that like button to support content that breaks these false beliefs. Now, let's get to what really matters, what the rich are doing right now, while the market is still calm. The first strategy is a well-known DCA, dollar cost averaging. In plain terms, recurring purchases with fixed amounts. They don't try to guess the bottom. They simply buy every week or month, regardless of price. This removes the risk of bad timing and builds a solid portfolio over time. The second strategy is smart diversification. Yes, Bitcoin is the focus, but many also allocate part to Ethereum and a small fraction to promising altcoins. The secret? Researching fundamentals and managing risk. No blind bets. The third tactic is macro cycle awareness. They don't react to headlines. They study market behavior over the years and stick to their plans with patience. This, combined with emotional control, separates those who profit from those who lose everything. And if you want more videos showing how millionaires think and invest, leave a comment saying, "Show me the strategy," and turn on the bell. The next episodes go deep into this topic. Now, the question that matters most: how do you apply all of this, even with little money? The first step is deciding how much you can invest per month without hurting your financial life. Could be $50, $100, $200. It doesn't matter. What matters is consistency. The second step is automating this through a reliable exchange. Just schedule a monthly or weekly purchase. Don't overthink it. Third step, think like an investor. Even with little, divide your exposure. 70% in Bitcoin, 20% in Ethereum, and 10% in high-potential projects, but only if you've done your homework on them. Then, take care of security. Use trusted digital wallets or even hardware wallets. Avoid leaving large amounts in exchanges. And finally, plan your exit. What's your goal? Accumulate for 2, 5, 10 years? Having goals helps avoid impulsive decisions. And hey, if this is making sense to you so far, hit that like button now, because this practical part is what really changes lives. A lot of people just talk theory. Here, you walk away with a plan. But for that plan to work, you have to shift your mindset. And that's probably the biggest difference between the rich and everyone else. While many get stuck in news and emotions, millionaires operate with cold logic, long-term vision, and discipline. They know time is the greatest wealth multiplier. They don't buy into hype, but into conviction. They don't sell out of fear, but based on strategy. And this isn't magical skill. It's a trainable mindset. When you realize that investing is planning today to harvest in the future, everything changes. The problem is, most people want results in 3 months. The rich think in 3, 5, 10 years. And this applies to crypto, stocks, real estate, everything. If you want to learn more about that mindset, subscribe now. Because here, we talk about the technical side, but also the mindset that sustains it all. Want more proof that this works? Let's look at real stories of people who started with little and changed their lives. Lucas, for example, started investing $100 per month in 2018. Even with little, he stayed consistent, learned about the market, and today has meaningful capital, all through patience and discipline. Then there's Thais, who works at a call center. She set up bi-weekly Bitcoin purchases since 2020. She never withdrew. In 2021, her capital multiplied, and now she's positioning again with awareness. These cases aren't exceptions. They're the result of a simple but powerful plan, and you could be next. But for that, you have to start now. Comment below, "I'm starting," if this is your turning point. And send this video to someone who always says, I don't have enough money. While most people are asking, will Bitcoin go up again? The rich ask a different question. What do I need to do right now to be positioned before the next rally? The difference lies in mindset. Millionaire investors aren't swayed by social media hype or fear from negative headlines. They study cycles, analyze fundamentals, and take action when most are paralyzed. In this chapter, we're going to explore how that mindset works in practice. We'll talk about risk allocation, long-term thinking, and how you can start training your mind to think like the wealthy, even if you have very little money to invest. Because everything starts in your head. And if you don't adjust your mindset, you'll keep repeating the same mistakes in every cycle. The rich follow a clear pattern. They buy when no one else is talking about it. In 2018, 2019, and even during recent market dips, large fortunes were quietly accumulating while the average investor pulled away. The logic is simple. Low prices mean lower risk and higher potential upside. In this chapter, you'll learn how to identify these quiet moments, how to use the dollar cost averaging DCA strategy, and how to build an accumulation portfolio, even with small monthly amounts. We'll also show how the wealthy look at long-term charts, ignore daily volatility, and how you can copy that exact strategic posture. Many people think the wealthy love to take risks. Wrong. The rich hate losing money, and they protect themselves at all costs. In this chapter, we'll talk about how big investors use protection strategies like stable coins, diversification, and cold wallets. You'll understand why digital security is such a critical pillar, and how that translates to everyday investors. We'll cover everything from physical wallets like Ledger to risk management practices that prevent a single market drop from wiping out your progress. The wealthy don't take unnecessary risks, and neither should you. Bitcoin follows a rhythm, a cycle. And within that cycle, there's a key milestone that happens every 4 years, the halving. The reward miners receive is cut in half, reducing the issuance of new Bitcoins. And every time it happens, the market reacts. Historically, Months after the halving, BTC price rises. And that's no coincidence. With less supply entering the market and growing demand, the asset tends to increase in value. Big investors know this. They don't wait for the news to hit mainstream media. They get in early, study the cycle, and quietly build their position. And the truth is, this cycle doesn't have to be a mystery. Just look at the data. In 2012, in 2016, in 2020, the pattern repeated. And now, in 2025, many are expecting the same behavior. If you're still watching this video, hit that like button and subscribe. There's still a lot more to come that will show you what big investors are really doing behind the scenes. While most people are still debating whether it's too late or too early to invest, the rich are already accumulating, and they're doing it silently. No show, no announcement. They know one simple truth. Prices only rise after the majority has missed the opportunity. That's why they enter when everything still feels uncertain. When the market is sideways, low energy, no hype, that's when they allocate capital in small lots, spread risk, and take advantage of the lack of attention. It doesn't mean they go all in. Quite the opposite. It's a gradual, strategic move. They use safe exchanges, split assets into different wallets, and never bet everything on a single asset. If you're still here, drop a comment saying silent accumulation to show you're also ready to play this game smart. You know what millionaires figured out? That the dollar isn't as safe as it used to look. With out-of-control money printing, record government debt, and inflation eroding purchasing power, keeping everything in fiat currency has become a silent risk. That's why many have started looking at Bitcoin not just as a speculative asset, but as a store value. Something scarce, decentralized, and resistant to government manipulation. Of course, this doesn't happen overnight. They study, diversify, but already understand that the future will punish those 100% exposed to the traditional system. Meanwhile, companies like MicroStrategy and billion-dollar funds are converting part of their cash reserves into BTC. It's no coincidence. It's protection. And even with limited capital, this move can be replicated proportionally. If this content is resonating with you, share this video with someone who needs to prepare before the market shifts. One of the most common mistakes beginners make in crypto is trying to time the top or the bottom. But big investors think differently. They know it's impossible to predict the perfect moment. So they use a smarter strategy, fractional entries. Instead of investing everything at once, they spread out their entry over time, taking advantage of various market conditions. This reduces the risk of buying at the peak and allows them to benefit when prices pull back. They use DCA, dollar cost averaging, a simple but incredibly powerful technique. This way, they build positions consistently without relying on luck. And the best part? You don't need a lot of money to use it. Even with small amounts, you can adopt the same mindset. Buying is just the beginning. The next step, and probably the most overlooked by beginners, is where to store your assets. And here lies one of the richest people's biggest secrets. Security comes before any profit. They don't leave large amounts on exchanges. They know exchanges aren't vaults, just temporary bridges. That's why they use cold wallets like Ledger or Trezor, and keep offline backups with multiple layers of authentication. They also divide their assets across multiple keys and wallets, specifically to avoid concentration of risk. Sounds excessive? Maybe. But those who've seen billions vanish from hacks know that protecting what you already have is priority number one. While many people make decisions based on headlines or random advice from social media, the rich rely on data. They study charts calmly. They look at metrics like MVRV, the Fear and Greed Index, on-chain volume, and whale activity. It's not about guessing. It's about interpreting. When the market is in panic, they're buying. When it's euphoric, they're selling or holding. It's a game of mindset and statistics. And the best part? These data are available to anyone. Websites like Glassnode, CryptoQuant, and CoinGlass offer these tools, but very few people take the time to analyze them. That's the difference between acting with strategy and reacting with emotion. If this chapter helped you see the market more clearly, leave a comment saying data and discipline down below. And of course, if you haven't subscribed yet, now's the time. There's a lot more coming. Yes, the rich pay taxes too, but the difference is they plan ahead. Instead of risking audit issues or overpaying, they prepare. They hire crypto-savvy accountants, report their assets properly, and use legal structures to optimize their tax burden. There's no magic, just organization. Knowing how to declare profits, when to sell, and what each move means to your taxes. That's part of the strategy. Ignoring it can turn gains into problems. And even for those starting small, understanding basic taxation already puts you ahead. There's one kind of investment the rich never stop making: knowledge. Even after building wealth, they keep learning, studying, and staying updated. They join masterminds, read market reports, follow trusted news sources, and listen to people who deliver real results. Because the market is always changing, and those who stop learning stop growing. You don't need a fortune to start, just a habit. 10 minutes a day consuming high-quality content already puts you ahead of 90% of people. And if you've made it this far into the video, you're already part of that group. More important than multiplying money is not losing it. And that's the golden rule of great investors. Protect your capital before chasing profits. That's why they never put all their money into one asset. Even believing in Bitcoin, they still hold stable coins, fixed income, stocks, and more. Diversification is key. They also set acceptable loss limits. They know when to exit a trade, even if it's at a loss, because they understand this is a long-term game. Those who try to win everything at once usually lose everything at once. Want to apply this kind of mindset in your life? Hit the like button on this video right now and comment long-term game, so I know you're committed to consistency. And finally, the biggest difference isn't money. It's mindset. The rich don't enter a position hoping to get rich in a week. They think in cycles, in decades, in solid asset building. Every decision is based on long-term vision. They'd rather invest 1,000 times with logic than once with hope. That's why they remain calm during crashes. They know it's part of the cycle. While most panic at a 20% dip, they see an entry opportunity. That mindset can be developed. It can be trained. And if you've made it this far, you've already started that process. To wrap up, take note of the 3 steps to apply everything you learned today. First, choose a realistic and committed monthly amount. Second, automate your purchases and avoid emotional decisions. Third, set clear accumulation and exit goals. Sound simple? That's because it is. But few people actually do it. And those who do reap the rewards. The next Bitcoin cycle is already underway. Most people will only notice when it's too late. But you're here now, and that gives you a huge advantage. Don't waste it. Take this moment and build your plan. And remember, great fortunes are built quietly, with small actions done consistently. If this video helped you in any way, leave a like right now. It really helps the channel grow. And subscribe, because every week I bring you practical, straight-to-the-point strategies to help you break out of the average and build financial freedom. See you in the next video. And remember, you don't need to be rich to start, but you do need to start to someday be rich.